Hello, 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 and welcome to Trading Made Easy right here on YouTube. I am back. I am back. It's been a little minute, but I'm super excited to get back into some content with you all and share some simple, easy trading strategies that I use with this system called Simplicity. Simplicity is our new trading system within the Super Easy Forex family. And what I'm going to be sharing with you today are just a couple of pairs. I'm going to, do an analysis on using the system, and of course using the system in the way that I trade the system. Right? I trade the system with our trading plan, Trading Made Easy trading plan, and I also use elements of the simplicity to help us capitalize on pips and pips and pips and pips, right? That's what the name of the game is, and this trading system totally allows you to do that. So if you have the simplicity trading system, this is going to be a benefit for you. If you have the triple arrow system, also it's going to be even a bigger benefit to you, because I do use aspects of the triple arrow system combined with the simplicity system. Okay, so if you don't have it, no problem. This system is a standalone, and it totally helps you to get in the market and capitalize on pips, right? So you're not going to be at a deficit here. You're certainly going to be able to use the system to work for you. Now, I have a trading community called Trading Made Easy. I do want to point that out before we get started. I am a part of the Super Easy Forex family. I get a lot of questions questioning that. I am a part of the Super Easy Forex family. However, I do have my own community within the community called Trading Made Easy. And in Trading Made Easy, we mastermind together. We trade simple, easy strategies utilizing our trading plan. And that's what we do. Now, one of the things that I also bring to my community for those that choose to join it is helping you to really customize a individualized trading environment that's specific to you. Oftentimes people think that it's a cookie cutter experience where what works for one person will be able to work for everyone else, and that's not the case. It's very individualized, very individualized. Your personalities are different, right? Our personalities are different. Our risk tolerance are different. How we see the market is different. And we need a trading environment that is conducive to those differences, to you as an individual. And when you are able to craft out a trading environment along with an effective trading plan, then you have basically crafted out your success, your track record, or not track record, but your journey, I should say, on this path of success with trading. And so it's very important to understand it's okay to be different, right? It's okay to be different. You must be different in order to begin your journey as a successful trader. And so that's what I help you do. So you'll have the links inside the description of the video if you want to connect with Trading Made Easy. Purchase your system. I'll provide all of that information, and we can rock and roll. Okay, so let's get with it. Let's get with it. All right, so what you're looking at is the simplicity system, as well as some aspects of the triple arrow system. Now, what I have done is I have added the big arrow, I've added my support and resistance, and I've added the entry arrow to my system. And so now I'm able to utilize the system based on our trading plan, and how we basically trade, right? Of course, if you didn't have that, this system is standalone, is very effective, and I can certainly show you simple, easy ways that you can utilize the system as a standalone. Again, that's done. I'll do other videos, and of course, in our community, we also identify those areas, those ways that you can trade the system as a standalone. But for today, this is what we're going to be doing, right? Alrighty, so again, big arrow I use and my entry arrow. Now, one thing I want to point out with my entry arrow is I have my entry arrow setting set to, I want to say it's 12. Yeah, 12. I have my entry arrow set to 12, and everything else is the same. I'll also make sure that my alert on is set to true, so that I can get the alert when the entry arrow populates. That's very pivotal. And hit OK. And so with that, let me just say, with that, it will give you an alert. As a matter of fact, you just sort of pop up. It will give you the alert when the entry arrow populates, However, you will only get that alert if you have your MetaTrader 4 up, right? It has to be up and open unless you have the VPS. It does not allow a push notification to your phone. So you actually have to have your computer up, okay? So that is set. Now that's very important because I base my entry, or at least my first entry, on the entry arrow populating. The big arrow, when it populates, is the only purpose is to let us know where price wants to go. It does not mean you execute. It does not mean that price has already began that trend. It doesn't mean any of that. It's just an indication where price want to go. And eventually, it will begin to go in that opposite trend. That's all it means. So it's more or less like a heads up, right? So it just lets you know that you should be looking for sales or you should be looking for buys. And so that's what that is. Now, what I do, I'm sorry, let me go over this. The support and resistance dots. The support and resistance dots from the triple arrow system, I add that as well. So let me show you what I do on there. My Super Easy SR. Now I have my colors white because I want a clear separation from the support and resistance from the simplicity, on the simplicity. I want it's set differently. And I'm just looking for those dots, right? And so I have mine set to white, so there'd be no confusion. And also for my input, I have it set to current. Now I do trade on the hour chart. I look at my hour chart and I analyze what's going on the hour chart prior to my execution. Now I do drop down to the lower time frame for entries. However, it's based on the analysis on the hour chart. And so I have it set to current. However, if you are on a 4-hour, if you are on a 15, if you have it set to current, it will adjust to the current time frame that you're on. So that's what I do, right? That's what I do. Now, and the reason why I have my triple arrow support resistance dots here is because what I have found, based on the settings that I have for the simplicity, this SR dots, the support and resistance dots, are more in alignment with my fib levels, which is great. It's more in alignment with my fib level. And that's more likened to a 4-hour trader or above. I am a intraday / scalper. And so with me adding the triple arrow support resistance dot set to current, it kind of brings it down. It brings it down, my TPs down, right? It allows me to get a closer view of of what's happening from the entry to the next support or resistance dot on the simplicity trading system. So I'm going to demonstrate all that to you and show you what I'm talking about. So that's why I have that here. As an intraday trader, my goal is to profit each day. I want to be in and out of the market. One of the flagship trading strategies that we use is the 20 pip trading strategy. And so we just want to get our 20 pips consistently. We want to get in and we want to get out the same day, right? Now, does that happen every time you trade? No, because we don't control price. We don't control, what's taking place and what's moving price behind the scenes. You can be stuck in consolidation, right? It can just be creeping along. and it may go into the next day. Based on my results and a lot of the members in the Telegram group, you're able to profit every day. If not every day, or when I say every day, let me back up. I have to be very careful. Every time you trade, you don't have to trade every day, but every time you trade, you get your 20 pips. If that does not happen, it's not often, right? It's far and few between that it will go into the next day. Because again, as I always say, the market will sneeze and give you 20 pips, but you have to have the right trading plan. You have to have an effective trading plan that would allow you to do that. And I believe that we have that. And so that's my goal. If that is your goal, if that's the type of trader you are, because remember, I talked about trading environments. It has a lot to do with your personality, your risk tolerance, and all of those things. So if that resonates with you, then this plan will resonate with you, right? This plan will resonate with you. Now, let me just let you know this. If you do not have the previous system, it's okay. I can certainly show you how you can accomplish the very same thing without the support and resistance dots. So let me just let you know that, right? But yeah, if you have it, then certainly you can put that there. Alrighty, so that's what we have here. That's the reason behind what I have here, the settings on the entry. Now, what I have found, and I'm going to do some little, let's go back so I can show you. What I have found with the settings that I have on my entry arrow, it gives you the opportunity to get in the trade earlier. So you get a early entry, right? And here's the caveat, guys. Here's the caveat. Based on the entry, I'm sorry, I'm just tongue-tied today. Based on the setting that I have for my entry arrow, the setting of 12, it also aligns with the MACD cross. That's so important because when the MACD, when the moving average is on the MACD, cross above or below the center line, right? We call that the crossover. That is when the trend has begun to take place. That's when the trend has begun to take place. And that's one of the benefits of the MACD, and that's the reason why I like the MACD, because when the moving average, the MACD line, crosses, when it touches that 0, 0, I call it the 0, 0 line, which is the center line of the histogram on the MACD, when it touches that 0, 0, and it starts to penetrate through, whether it's below or above, that is the beginning of the trend actually taking place. It does not take place when the triples come per se. Now I'm talking old system. That it doesn't take place there. Now sometimes it aligns, but oftentimes it does not. Right? So it does not. That's why a lot of times when you get into your position, you tend to go right into drawdown because it's not really ready yet. It's not ready yet. It's too early, right? It's too early. Now, is it going to go? Absolutely. But you'll probably be in drawdown until it actually makes its transition. The MACD identifies the transition. And the entry arrow set to 12, that setting, is in alignment with the cross of that center line. So that's why I use that particular setting, because it is in alignment with it. So let me show you as well. Man, I don't have my glasses with me. Alrighty. We're just going to have to squint our way through, right? Okay, so for instance, you have the entry arrow that populated here. From the entry arrow to the triple arrow that populates on the simplicity system, you would be in good profit when that happens. Sometimes the entry arrow populates along with the triple arrow, but not all the time. It does not. That happens less often than not. So it allows you to get in right when the transition of the trend begins, and it allows you to be in really good profit by the time the triple arrow on the simplicity populates. Back test, back test. Check this out for yourself. You must use my settings though, but check this out for yourself and you'll be able to see. Now, let's say the entry came here. We would not come into the position at this point. Why? Because it's still above my trend wave right here, right? It's still above. You can put the 50 moving average, which is what I do. Um, I have a 50 on here, and it needs to cross the 50. It needs to be below the 50. But you can also use this trend surfer here as a 50, because it actually kind of does the same thing. When price is above it, you're still in buyer's territory. When it's below, you're in seller's territory. So you can use that in place of the 50. So we would not be getting in, even though your entry arrow did populate. We're still not getting in because price is still above this wave here, right? The trend wave, I call it. I just named it that. That's not the technical name for it. I just named it that. But it did cross and close here. It did cross and close here. Now what I want you to do is follow your eyes down to the MACD, right? Aligned with this arrow, this candle. And what do you see? You see the moving average line crossing what? Crossing the center line on your MACD. That tells me that that's when the trend is actually beginning. Now the trend is actually going in that direction. See, it wasn't going in the direction here. It wasn't going in the direction of when my entry arrow populated. It was consolidating, but it came here. So it gets you in not only at a earlier entry, but the time that the action is actually taking place. And that's what we want. That's what we want. So this is where you would actually get in. Now what I want you to do is align your eyes to the trend surfer. And what do we have? We have red, red. That's even stronger. But let me let you know this. If it was a conflict, if it was green, red, it's still okay. It doesn't mean that the trend is not happening. It does not mean that. It just means that it's not as conservative. It's not as conservative, right? So you can still take the position, especially with our trading plan that we use. You can still take the position. Now, if it's green, green, right, signifying a buy, bullish trend, bullish momentum here, right, and I'm looking for sales, then that will give me pause. That will give me pause. So if it's red, red for sale, perfect, perfect, right? If it's green, red, still good. But if it's green, green, no, that's not. That's not. But you would find in that instance that the other confirmations don't add up either. So again, you've been saved from entering in at the wrong time. At the wrong time. And again, the trading plan that we use help you to identify those other confirmations. So we're gonna you'll be good. You'll be good. Alrighty. So now here we are. Here we are. We're gonna get in the trade. Now I'm gonna take this to this area right here, right, where the triples came in. Where the triples came in. And that would have put me roughly at about 115 pips. Before the triples came in on the simplicity. Before. Now, the settings on the triple hours for the simplicity, I have it set to the default settings that comes with the system. I have not changed that. So it allows me to get in. My settings allow me to get in early, right? So I get a better entry price. And I get in when the trend is actually taking place. So that's why I use that, right? That's why I use that. And so you're in, you're there. Now, we focus on the left side, obviously, because you don't see what's going to happen on the right side of price. So we focus on the left side. Now, one or two things that you can do, you can trail from that point when you get your triples. You can start trailing now so that you can lock in your profits. So you can lock in your profits. Now, looking at the left side, we have indications at the left side that lets us know where price is going to go, because we do know that price repeats itself. We just don't know when price is going to hit certain levels, but we know it will. We just don't know when. Now, based on the trading plan, the Trading Made Easy trading plan, What we look for obstacles, we look for warnings in the road so that we can identify where potential drawdown is going to happen. Because as an intraday trader, right, and as a scalper, nobody likes drawdown. Don't get me wrong, but if you are a long-term trader, you're okay. You're more okay with drawdown because you understand that you're going to have it, right? And we all are, but our goal is to minimize it, right? We want to minimize it, and that's what the triple arrow support and resistance dots. That's the purpose it serves, because it lets me know what's going to be happening as we go along. Now, this support dot here is part of the simplicity. I have not made any changes. I don't think that you even can. It's coded based on the algorithm. So this is where the target area is. This is where the target area is. And so if I would have gotten in here and say my support and resistance dots were not there, then I'm looking at this area here as the TP, which is about 342 pips. Now, price is going to hit that area, but again, I don't know when it's going to hit that area. So that tells me that there will be some drawdown before it hits that area. Now, what I want to show you is, let me just put a horizontal right there so I can follow this line. Now, this is that line that represents that support area previously. And where did it go? See, I told you it's going to hit it. We just don't know when. So it lined directly with our demand zone. That's why I so love this system, guys. I love this system. And I'm going to show you about the demand and supply zones. These are demand zones, supply zones, but it is in alignment with that, right? So let's go back. Bear with me now. I want to show you something. Okay, so we're in this day, right? I have my period separators here because it helps me to easily identify each trading day and what's taking place in those days. So we have, we entered here, right? So that's 1 day, 2 days. I guess the easier way to, for the sake of this video not taking a long time. Okay, I can't see my date. Well, let's go this route. That was on the 6th, right? I'm sorry, on the 8th of June. That is when you got in the trade. And this is based on you staying in the trade to hit that support level that I just identified. So that was the 8th of June. And you hit it, right? Let's say between this candle and this candle is when you hit profit, right? Based on that support level. So that would have been from the June 8th to when? Come up, because I can't see my date. Come on. See, it won't work for me when I want it to. There we go. Oh, there we go. The 18th. 10 days you would have been in that trade. 10 days. That's my point. That's a long-term trader. And that's perfectly okay. Because guess what? In 10 days, you would have racked up over 300 pips. So if that's your trading personality, hey, this system is perfect, right? But I love the fact that it's customizable. Certain elements is customizable so that it can fit. I can bind the triple arrow. Now, here's my point. As an intraday trader, that's too long. I'm not even trying to be in the trade that long. No, I want daily profits. And so that's why I'm an intraday trader. And the Trader Made Easy trading plan supports that. So I'm in, right? Y'all bear with me. I'm in the trade here, right? So I'm looking at my support and resistance dots from the TA because it's allowing me to capitalize on pips along the way. This could have definitely been a long-term, like a second position that I just let run, right? This is likened to arrow to arrow trading for me, right? But my daily money, everyday money, would be based on the support and resistance here, my dots here. So what I would be looking at is where's my first level from this entry where I can potentially take profit, right? So that would be here. Well, actually here, here, and here, right? So right here, if I went to this level, that's 128 pips. If I went to this level, that's 71 pips. If I went to this level, that's 46 pips. Now, also, what part of our plan is these. I focus on the previous 48 hours as well. Okay, and there's a reason for all of this stuff, but I'm just giving you the general and what you can do. So you have 3 TP areas right here that you can capitalize on, and you can profit in a daily time frame or a 48-hour time frame, right? So let's say, again, I got in here. If I was to take this first one, I would have been, I'm aligning it with that, right? So I would have made my profit right on this candle. And this is the same day, my friend. And I would have walked away with a little over 40 some odd pips. Same day. That's the key. Intraday trader, scalper, same day action. That's what we want, right? That's the purpose of these support and resistance dots. Okay. Now, and of course, you can certainly here, this level here was about 70 some odd pips. Same day. Would have made it. Does it always happen like that? No, because the pip count, it could have been 20 pips, it could have been 30 pips, it could have been 15 pips or whatever, and you're trading it and you're profiting the same day. But that the key is that the support and resistance dots here allow you to do that. Okay. Also, another benefit in utilizing the support and resistance dots from the TA system is that it also helps you to identify potential drawdown, where it's going to happen, right? These key areas. Because again, what took place in the past is going to happen again. So here's a key area right here. This is a pivot area, right? What's likely to happen? Well, what we can see is what happened before. As price was going up, came down, hit this area, then what happened? It pushed it back up. It broke, right? It broke this key area, this area here, and then it came here, right? What happened? Pushed it back up, and this was a strong push up. What's likely to happen when price comes back to this area? We're likely to have another what? Push up. Well, let's roll over here. Let's roll over here, okay? So we are aligned with this area right here. We're also aligned with this area right here, okay? Price came down, we hit this area right here. Now line it up, right? We're right over here. What happened? It pushed price up. When price hit this area, what happened? It pushed price up. Now we're in the same point on this side, right? Price came down to the same area. What happened? It pushed price back up. It pushed it back up. So the left side of your chart is pivotal. Those are your eyes, and it's like a cheat sheet because it allows you to see what happened in the past and what will likely happen in the future. We trade what we see. We cannot make the assumption that, oh, it's going to break through. We cannot, because it could. Because what we do know is that it will break through. We just don't know when. And we cannot assume that on this trade that it's going to continue to go down because you have your triples. It's going to continue to go down and break those key areas. And what I do know from what I'm realizing more and more, just talking to people and things like that, is that most don't even consider the left side and what took place in the past. This is your golden ticket. The left side is your golden ticket. It's your cheat sheet. It's telling you what's likely to happen. But don't make the assumption that it's going to break through on your trade or it's going to break through because you have your triples. As you can clearly see, that's not the case. Again, do your back test. Just follow what I'm sharing with you and back test it on your own. You'll see the consistency. So what happened here? It retested. I'm not retested. It pulled back, right? It pulled back. Yes, you got your triples, but that doesn't mean it's going to fall to the floor. At some point, it's going to pull back. And the Trader Made Easy trading plan helps you to identify those areas to avoid them. To avoid them. Now, let's say that you were in the position and you went long term. Okay, you went long term to that support area that I identified right here. So now you're in the position here and you're riding it. So now you're pulling back there, you're pulling back here, right? You're pulling back here and all of that. And in some cases, even with the pullback, depending on when you got in, right, you'll still be in profit. But you can't, that's not something you can assume that's always going to happen, because you can have a reversal that takes you all the way back to where, the big arrow came in at, where the triples came in at. It could be a deep reversal, right? It could be a deep pullback. So it's not always the case that you're going to be in profit even though you're in drawdown. It's not always the case. Again, we don't want to make those assumptions. We do not, because the market is not your friend. They're not thinking about, well, we're not going to pull all the way back because that's going to put Janice in the negative. They don't care, right? So, but we have to be able to utilize the system for what it can provide us. We have to be able to do that so that we can do what? Protect our capital. That's your number one goal as an investor. Protect your capital, right? So again, this also goes along with the entry and how we base our entry. So I would have entered here, right? Would have entered here. We still have drawdown, okay? But it never went back above my entry. So even though, and this is provided that I took the long-term trade, which I would have, that would have just been my second position. I would have let it run. But as you can see, based on my entry, based on my parameters on my entry arrow, right? I got in right when the trend started, okay? Right when the trend started. And yeah, I suffered some drawdown, but I never would have been in the red in my account. So hopefully you can see that. And again, this is not meant for me to just really take my time. If you want individualized coaching, by all means, I have the link inside the description of the video, and you can schedule an appointment. But I just want to show you the power of that. And this works for just back tests, right? Okay, so now price has hit our area, and it happened to be where? In the demand zone. This is a pivotal zone. When you're in the demand zone, you should only be looking for buys, because in the demand zone, basically, let me just give you real quick, because I'm not going to really get into supply and demand on this video. It'd be too long. But basically, price has been reduced to a low price, to a point where now buyers are now coming in the market. That's what's happening in the demand zone. Buyers are starting to come into the market. Why? Because the price is low. I'm just giving you a general layman's term. Price is low. Think of yourself as a retail buyer. You're going into a particular establishment because they're having a 50% off sale. What happens when they do a 50% off sale? What happens when they do a blowout sale? What happens when, the price of merchandise is drastically reduced? As a consumer, what do? You flood in to do what? To purchase. And that's what happens. You a buyer. You're buying that merchandise. Why? Because the price is low. And that's the same thing that happens in a demand zone. The price is low. So price is going to get into the demand zone. Price will start what? Bearish. You got to be selling. And as price decreases, right? As the candles continue to go down, what's happening? Price is going down. We don't make it difficult. Price is going down. We started, where did I start here? Let me move myself. Oh, I don't have my glasses, guys. But 123.2, 230 something. Let's just say that, right? to 123.233. We just say that. Price is decreasing. Price is decreasing. It gets to this point of 119.848. That price is lower, correct? It's lower. And it got to a point in price where buyers began to come in because the price is low, my friends. So, with that being said, we're only looking for buys in the demand zone. That's it. Because now we're going to buy it all up. We're going to buy up the merchandise. And what you will see is what? Bullish candles emerging out of the demand zone, making its way up. Buyers, buyers, buyers. I'm going to show you one to show you that illustration. Buyers, buyers, buyers. Same thing happens for supply zone. So as the buyers come in the market, you're going to see bullish activity. Boom, boom, going up. Boom, boom. And it's going to go up to a point where it's going to reach a supply zone, right? A supply zone. And in my opinion, guys, this supply, the identification of the demand and supply zone with the simplicity trading system is golden. Golden. You just got to know how to trade it. And it's very simple. It's very simple. Okay, so that's what's happening. So you get into the supply zone. You only can go into a supply zone from a demand zone. That's obvious, right? And so once you're in there, what are you looking for? You're looking for sales now, because just like the price was reduced low to get to a demand zone, the price is now high in a supply zone. So what's going to happen in the supply zone? The price is now increasing, right? And what happens is we're going to what? Sell off. We're going to sell off because you as a buyer are buying up the merchandise because the price is low. As a seller, you are what? You're dropping the price. You're dropping the price, right? Because why? The price is high. It's just a reverse. Again, didn't mean to go into that. I'll do a separate video on that. Let's move on. But the key is you should only be buying in the demand zone. You should only be selling in the supply zone. All right, so we're in the demand zone now. And of course, the market closed here. And so what we do know, and then voila, we have our big arrow to confirm that. Beautiful thing, right? Okay, so we are looking for price to come out of the demand zone. We don't want to buy conservative trading, right? Because if you put in a buy in the zone, that's a risky trade. I got burnt for that, right? You want to put your position in when price comes out of the demand zone and close. So it needs to break this zone because price can continue to go down inside of the zone, right? Which is why it's risky to do that. But you want to wait for it to come out of the zone. And once it comes out of the zone and close, then we use the rest of our confirmations and we take the trade and we ride it up, right? It's a beautiful way to trade this system, by the way. I'll do some more videos strictly on that so that you can, see if it's something that you want to do as well. But powerful, powerful. Okay, so let's go back. Well, let's pick another pair. I'm sorry. Let's go with GJ. Let's go with GJ. All right. So right now, what happened? We're in a demand zone. What should we be doing? We should be looking for buys. When price breaks the zone and close, price needs to come out of the zone. We don't want to trade in the middle. No, we don't want to enter in a trade in the middle. That's risky. I'm not saying that you won't make your profit. I'm not saying that. You could, but just know you're in a risky trade. You're in a risky trade. The best, the most optimum entry would be outside of the zone. Okay? Outside of the zone. Alrighty. That's just another way of trading the system. Okay? I just kind of slipped off on another round. But that's another way of trading the system. And I'll do another video on that because it's powerful. But today, I just want to demonstrate basically how we use the Trader Made Easy trading plan with our simplicity trading system. And so now we're bearish, right? Let's look for a bullish one. We did a bearish one. But let me just show you this real quick because I love it. All right, entry arrow populates, right? It is inside the middle, so I would not have taken that. So right here is when I would have taken that position. Let's just say from this point here, let's look down at our MACD. I told you it lines up. The transition is happening, right, of the trend. Now, but let's take it to when the triple arrows populated. It populated right here on this candle, which is 63 pips. So you would have been 63 pips in profit by the time the triple arrow on the simplicity system would have populated. At this point, you can lock in your trail it from that point. Lock in your position, lock in your pips, so that no matter what, you win. Right? Beautiful thing. Beautiful thing. I can show you that as well, more in detail. If you want a private session, we can peel this onion back and individualize it for you. So here we go. So this is where we are, right? Just because you have your triples, you cannot ignore what the left side of the chart is telling you. You cannot ignore that. And what is it telling you? Let's look here. Right at this point here, you see this consolidation, right? Price just hovered, didn't break, hovered, right? Didn't really break. So what does that tell me? That is likely to have the same effect on the opposite side, this area. But you would not have seen this, right? So let's go right here. So from this point, you got your triples. You thinking, uh-oh, we about to go. Because, and in this case here, you have your support dots. That's the simplicity support dots right here as well. It just so happened to line up this way. So that's a good thing. So what this tells you is at this level, we're going to have, this is a key level, we're going to have a reaction, right? We're likely going to have a pullback, right? That's what it's telling you. And it just so happened to line up with the support and resistance that I've identified from the TA. That doesn't always happen though. In this case, it did. So that's good. So we know we shouldn't be trying to take profit below this area, because at this point here, we should be expecting a pullback. And that's what happened, because you would not have known that from this candle, right? So just because you have your triples, don't ignore what the left side of the chart is telling you. That is how you prevent, or at least minimize, your drawdown. And that's what I'm about all day long. All day long. I want to get in, get out, because here's the thing. You can 20 pip your way to financial freedom. If you know you can go in this market and get 20 pips consistently, you can 20 pip your way to financial freedom. It's about compound. It's about discipline and consistency. And it's about utilizing our 20 pip strategy spreadsheet. We utilize that. So, and you follow that. Okay, so here we go. So you see, let's do a bullish one. Do this back test for yourself. All right, my entry arrow populated here. Let's look down at the MACD. What's happening? It's crossing over. The trend is happening. You're not getting in here, where it's playing around. You're getting in here, right? You're getting in right there. So you're good. Now, in this case here, the triples came right there. So you're around in this area, about 16 pips in profit. You're still in profit though, right? When the triples came, okay? And then you can ride that up. Again, I don't work on this side of the chart because we don't see that. So the triples came here. I'm in profit when it came, right? Up in this, here's a little drawdown. So you wouldn't have taken this anyway because it's bearish. It needs to be bullish, right? But let's go with what's happening on, we would have gotten in here. Okay, right here. Let's go what's happening at the left side, because we don't know what's happening over here. What's on the left side. Well, we have this first resistance area, 34 pips. So I'm getting 20 pips, right? So guess what? I got my 20 pips. Bam. I not only got 20, I got 34, right? But more importantly, what this tells me is that at this level, that I can expect a pullback of some sort. a pullback of some sort. And basically, that's what you would have seen in here. That's what you would have seen in here. And let's just say, okay, how far can I take it, right? How far can I take it? Well, this is my first level here. I can go here. Price is going to get into this level as well, which is about 90, 85 to 90 pips, right? So that's my potential. Now, the simplicity resistance dots is right here. That's my long term. See, in between that is telling me where the potential drawdown is going to happen. I want to avoid that as an intraday trader, as a scalper. So that's why these are very pivotal. But my long term, for my long term traders, here you go. It's telling you where price is going to go. It's not saying that it's going to go in 2 days. It's not saying it's going to go here. And when you put your trade in, we don't know when it's going to happen, but we know it will, because it's a previously identified area of resistance. So this is where your TP at. So I hope that helped. I'm at 45, 46 minutes in. And I always say I'm going to keep it short, and I just don't. But for those that really want to learn, this is good information. So right here, let's say you went to this level, okay? You would have made your money the next day. You got in this day, you made your money the next day, 90 pips the next day. Let's say you got in and you wanted to go to this TP level. This TP level would have taken you into the next trading day, But technically, it's kind of like the same day, depending on the time. But nevertheless, you would have gotten into profit right here. Bam, you're done, right? Simple, easy trading. We don't have to make this difficult. We just have to have an effective plan. And I believe the Trader Made Easy trading plan is effective, right? And then we just exercise discipline and follow the rules, and you'll find that you'll be profiting far more consistently in the market. We have everything that we need in this system. We really, really do. You don't need to go anywhere else. And I will scream that to the mountaintops. You don't need to go anywhere else. So for those of you that's looking for GJ, GJ is positioned now. It's looking like it wants to go back up. It's in a demand zone. We have our big arrow that says so. We wait. What are we waiting on? Wait for it to break this zone and close. Wait for it to break and close. And once it breaks and close, let me give you our trading plan. Now, if you have the old system, I would recommend that you put your dots on there. But nevertheless, you wait for it to close. You can even put in a pending order at this level. You can even do that. You can put in a buy stop at this level if you wanted to. Or what I recommend is that you put in an alert, because you always want to assess what price is doing, right? You don't want to just jump in blindly. Put the alert in so that you have an opportunity to come back and assess what price is doing, because what we need price to do is close bullish. It could close bearish. We won't take that. We need it to close bullish. We need to be above the zone here, right? And for me personally, I would be looking at, it definitely needs to break this area of consolidation. It needs to break that. For me, it needs to break that. Okay. Now, if I get my my entry arrow, which is what I'll be waiting on as well, then I'll assess, that with the MACD. So those are the things that I will be looking for. And in some pairs, at different times, your supply and demand zones will be further apart from each other. But the closer it is to each other, what that really identifies is, just a big consolidation area. But nevertheless, the same thing happens. It's coming out of a demand zone as a buy, and it's going to travel up to the supply zone, and then it's going to come out of the supply zone as a sell, and it's going to sell down to the demand zone. That's all you're doing, is trading zone to zone. But keep in mind that the distance between the two, the shorter the distance, of course, the shorter the run of the trade. The larger time or the space between, if it's a larger space between, then you just have a larger opportunity, a longer run in that trend. That's all that means, right? But we concentrate on the left side, folks, is important. So anyway, I'm gone. I am gone. I'm excited. I'll be back. I'll be back with more. And listen, let me know what you want me to talk about as far as the triple arrow system for those that have it. If you don't have it, you can't get it. I'm sorry. It's done. It's over. But you definitely have the simplicity, and you want that in your trading life. You want it, right? So let me know what you want me to talk about. I'll be more than happy to give you my insight on it. And let's rock and roll. Utilize the links inside of the description so that you can get your system first and foremost, right? And also connect with me if you want individualized training. That's how we're doing it at Trading Made Easy. So you all have a great day. I'll see you on the next video. Bye-bye.